Hello value investors, thank you for joining me. Today I want to discuss Roku and why I believe that Roku is undervalued at less than 20 billion market cap. So if you're new to the channel, please subscribe now so you can get my next value installment. Also, don't forget to check out my marketplace on Seeking Alpha called Deep Value Returns, where you can do a free trial and check out which stocks I own and why, with a balanced argument for the stocks I own. So let's get started. Roku is an operating system and it plays very nicely into the cord cutting theme. So the cord cutting theme is that households are cord cutting, essentially that they're coming away from their traditional linear TVs and they're opting for a connected TV so that they can watch the likes of Disney or Netflix. And it plays quite nicely because it's able to disrupt that medium that consumers were paying a large premium for heavy bundles, and now you can really go for the skinny bundle option, which means that you can get whichever platform you want to watch, and Roku will provide that with a very smooth operating system that connects up via the stick, via the dongle, and it's able to just charge a small fee to connect the households to the content providers. This could be a myriad of different publishers. It's really agnostic about what the household is watching. So I think that this is very attractive because you can see here, so it's growing at a very steady clip at approximately mid-50s. Now, we know that for Q2 2020, the ad market significantly weakened. So this means not only will this revenue growth rate come down substantially, it also means that it's going to be most likely EBITDA negative, because that negative operating margin happening to Roku, because it still has all the still has all its staff and the operating expenses are largely fixed. So if the revenue comes down, the losses are going to amount on the bottom line. However, when it does recover, when the ad market does recover, that operating leverage will work on the other way, and once it comes back up to mid-40s or even approximately something, dare I say, close to 50, it would bounce back up again. So I don't know how Q2 is going to play out, and obviously I don't know how the rest of the year is going to play out, but I'm quite bullish that Roku could still come out at approximately 30% revenue growth rates for the year as a whole, and hopefully into 2021 it would pick that back up again. So there are a few things that I think are really interesting here. So in the past, Netflix used to be traded on the number of members increasing. But as the market in the United States saturated for Netflix, its international subscribers are worth significantly less. So I don't get the feeling that the stock nowadays trades as actively on the increase of number of subscribers, but in the past it did. And you can see here there is a very steady increase up to Q1. For Roku, the active accounts increased by 37% year over year. According to the earnings call for the month of April, active accounts were actually up 38% year over year. So even during the lockdown, as you would hope, people are still going over and opting for Roku as their chosen operating system for their connected TVs. So I would like to believe that these new subscribers, these new accounts, would stay with Roku after the lockdown, after this period, and they would just become a habit of staying on the platform. I would expect the RPU to come down quite significantly in Q2, possibly even a little bit Q3, just because the ad market right now is so weak. We can see that from all kinds of companies, from the likes of Facebook or Google. The ad market is pretty weak right now, and you can see this in commentaries far and wide, really. What I do think is quite interesting, and this is something that I'm watching quite actively. So you can see here, this is Roku's gross profit margins for the platform. And you can see I've only included the data up to Q4 because I really wanted to show what it's like in a normalized, strong environment when the economy is strong, that the gross profit margins are around 60%, let's call it 60-65%. Now this is just for the platform. We're just taking a fee to connect up the households and the publishers. So this is not that great when it comes to gross margins. And I said that in the article that I wrote that it comes down to 56% for Q1. So this is even before the weakness in the ad market. So for Q2, it's going to come down even further. So will it come back up to around 60% Roku's gross profit margins for the platform? If it does, that's quite attractive. If it does not, it means that it's losing pricing power. And that, for me, if it comes below 50% for a sustained number of quarters, I would say that my thesis is broken here, because what I'm attracted to is this platform, the gross profit margin being high. And if it's not, if it's just basically competing on price because it's losing significantly gross profit margins here, it just shows me that it's competing with Fire Stick from Amazon and from Chromecast, and it's just losing too much pricing power, and it just breaks up the thesis that this is a high quality business. So this is something that I think is quite interesting, and I'm going to put a lot of weight on this here to see how this unfolds in the future. What I will comment on is the valuation. So if I look at the rest of the SaaS world, most SaaS businesses are trading for 20 times sales. Now, obviously, Roku is not a SaaS, software as a service business. It is just really a connection. And on the other hand, I do see that if someone is a household takes on Roku, they go for the hassle of kind of either buying a TV that has Roku operating system on it, because in the United States, 1 in 3 TVs have the OS already installed. So if a household is already with Roku, I would believe that even though it's not a SaaS business, that the household is quite entrenched in keeping the Roku operating system on. Now, so that kind of gives me the idea that this company could trade similar to a SaaS business, even though it's not really a SaaS business. But if you look at many SaaS businesses right now, what they're claiming is the customer being locked in for a long period of time is really not. There's a lot of consulting fees and other things that get pushed into that valuation, with the argument that the SaaS business has a very high net dollar retention, but that's a very easily to fudge metric. So I do think that whereas Roku is not a SaaS business, it can certainly be valued similar to that. And at least I think that it's not unreasonable to have 20 times sales for this business. On the other hand, in the past, 20 times sales, I would have just said that's crazy. But it's just that things are so expensive right now. So it could be a new paradigm. It could be that things go like that. I don't believe that that one can say, oh, the market is totally irrational and all stocks should be trading at 10 times sales. I mean, who's to say what's what? And I've been quite bearish on many businesses for a long time. And over a period of years, I just keep seeing them go up and up and up and up and up. So maybe the market is mostly right. So it's difficult to say what's what. What I do see is that there's a large discrepancy between Roku and other high growth stocks. And as I mentioned, Roku, analysts are still thinking that Roku could next year in 2021 be growing close to 35%, which puts the stock at quite a low multiple to forward sales. So I think that this opportunity is quite interesting here. So the thing that I'm most concerned about would be the gross profit margins, if they're able to stabilize. If they are, this one should be quite an interesting investment. As always, don't forget to check out my marketplace, Deep Value Returns. I'll tell you which stocks I own, stocks like Roku, and why, with balanced arguments for the stocks I own. Thank you for listening.